So guys, I think like some people still not catch the point that investing or trading is actually involved pretty much a lot in fundamental analysis. Not always about the meme stock or some kind of certain types of like random questions like, oh, what do you think about gold price? What do you think about this meme stock? What do you think about Nancy Pelosi, who is one of the Congress woman on the U.S. Parliament, whatever? I don't care. I mean, bro, when you actually want to go into companies and companies and companies, you have to go through the process, look at the numbers, financial numbers, to see whatever happens over here, like this. You have to know the market cap, enterprise value, the sales revenues, earnings, and most importantly, you have to know where to get those kind of information from. It's just not always about like, oh, how are you gonna do that? What is gonna be the stock price? What is gonna be the best company to invest right now? How am I gonna make the fattest money in about one or few days? Hey, shut the fuck off. That's not gonna be how it works, right? So, for example, if like yesterday I was doing some types of company of Palantir Tech, right? So Palantir Technologies. You have to go to SEC, which is a security exchange commission, and looking at an annual report or quarterly report, right? And then you can see, yeah, look at it. You have to know how to read the balance sheet, the asset, cash, liabilities, debt, in order to calculate the enterprise value by adding like a market cap with the net debt. Net debt is mostly calculated by total cash, subtracting the total debt. So that is actually how you get to calculate the enterprise value. Then you're gonna have to go to the statement of operation or income statements. You have to know the revenues, cost of revenues, what number create this kind of like values on it. You're gonna have to know the margin between the gross benefit and the gross profit from 2023 to 2024, revenue growth, how many percent of that, and earning per shares. You have to calculate every single this kind of number in order to make sure that how effective it has been working for the last 1 year, in order to think about the long term of the place that you put the money in and what do you expect from this company, right? And it, by this kind of analysis, that is actually just about like effectiveness of the company. But going to the side, you're gonna have to calculate revenues, earnings, and earnings is mostly like net income via common shares, right? So you're gonna have to calculate the price to earnings and enterprise value to earnings in order to make sure that like if this company is being pretty much overvalued or undervalued. And that's how you actually think about like whether you should be shorting this or you should be longing this. But for example, in this case, Nokia, the stock price is €4.27, whatever we got over here, and we got like a price to earnings, and we have seen that like it's 51% overvalue. So usually when it's actually being traded at a premiums or being overvalued, you take to short it. But the problem is that the share price is too low for you to short it. Because the problem is that if you short this one, it would just need to go down to $0, and you only get about like 40 to $0. Still actually like not worth it, right? But you are still actually being at risk of the unlimited gain of the stock in the future, which you can lose a lot of money. And I don't recommend you to short this one, even though it is being overvalued. So yeah, that's how it works so far.